Today we're talking about looming recession, or should we say recession very much on the way, if not already here. We're talking about the economics of a dying empire, the AI bubble. We're going to talk about so much today here, Professor Wolff, and no better person to talk to than you. So let's get started on this. I did want to talk about this fear of a recession that is building with major, what is being called ugly trends by mainstream economists, 7 of them, according to Business Insider. And I just wanted to show some of these graphs, one of which I thought was very, very, very troubling in terms of government employment. You see a big dip starting with Trump's tariffs there in April and barely coming up over time. And here you see the prospects assessment of finding a job in the United States in the next 3 months. If you lose it today, you see that it is basically essentially where it was in 2020, which was the major pandemic crash. These are really bad signs. And Professor Wolff, I wanted you to comment. Everyone's talking about the AI bubble in particular being a major trigger for this recession. Here is Bloomberg talking about it, the fear of $1 trillion AI bubble growing. And I wanted to just go down to what they say as being a major reason for this, talking about how over the past year, developers are experiencing diminishing returns from costly efforts to build more advanced AI. After months of touting significant leaps in GPT-5, OpenAI, for example, the big monopoly, the release of its latest model was met with mixed reviews. And they say that they're missing something quite important. Compounding concerns are China, so-called flooding the market with competitive, low-cost AI models. While U.S. firms are generally viewed ahead of the race, Chinese alternatives risk undercutting Silicon Valley. And here is where that is said here in Bloomberg. So, Professor Wolff, can you comment on the fear of the bubbles that are really brewing in the U.S. economy, the role of China, and really, what does it signify to you when you see these absolutely devastating economic numbers for the United States as its empire declines?
Well, I think what we're watching here, or at least the way it makes most sense to me, is a number of converging tendencies. They don't all have to go together, they often don't, but they are now converging. And that's probably the most dangerous situation you could imagine. So, for example, the AI so called revolution is now encountering mounting skepticism, not because there isn't going to be a certain amount of installing of AI that comes at the expense of jobs. That's pretty much guaranteed to happen, is already happening to some degree, although it's not the major driver of unemployment, at least not yet. The question, therefore, is really not whether this is going to happen, but whether the hype about it is correct. Are we going to have it on a scale that makes it a mass social phenomena? You know, it's a little bit like the internet. If you go back to the 1990s, we had a spectacular boom around all of the changes that would be coming to employment and many, many other economic variables because of the internet. Well, it was true that the internet would have an effect. It has had one over the last 30 years. But the hype was way overblown, which is why in the spring of the year 2000, we had what has since been called the dot-com crash, because the investments had been made far beyond what the actual opportunities for profit were. And let's remember, as you rightly pointed out, that was before we had a serious competitor for Silicon Valley's work coming from China. The situation now is very different because you have to factor in not just the reality there will be job loss, not just the reality that we may be hyping it, but now the added factor that whether we are hyping it or not, there's a whole nother ecological and economic system out there that is busily working at producing AI at an alternative and attractive price. And that could change everything about the other two that are converging. But let me also push a little bit that there are other factors. Capitalism as a system, and this has to be remembered, has an economic downturn on average every 4 to 7 years, and that's been true for centuries. A whole new economics was developed in the 1930s after the man John Maynard Keynes in England, who invented it, Keynesian economics, designed to teach generations of economists, myself included, how an economy, a capitalist economy, could and should use governmental monetary policy and governmental fiscal policy to moderate, slow down, ease off these circular, cyclical downturns. It was even imagined by some that Keynes could save us from having them. None of that worked. We have them. We had them after the 1930s, and indeed, two of the three worst, two beside the Great Depression of the 1930s, were in fact the so-called Great Recession of 2008 and 9, and then the pandemic collapse in 2020. And indeed, the last big crash was 2020. And how many years are we after that now? 5. That's right in the 4 to 7 range. We're due for one. That's one of the reasons Wall Street and the whole world are shaking now, because the question really is, given the likelihood that we're going to have a downturn for all the reasons we always do, the AI bubble is the likely culprit to be the trigger, to be that thing that happens that sets it off. Now, of course, other things can set it off. We know that from the history. Very different things have happened. You could have a credit crisis. And let me remind you, the United States now has a greater debt, national debt, than we have ever had, even in the midst of war. Our national debt is extraordinary, and it keeps going up now by the trillions per year, which it never used to do before. The level of corporate debt is at a record high, and household debt is just shy of the record and quickly catching up. So, as a result, we have levels of debt that would ramify and magnify an economic downturn in ways we can't quite understand, because we've never been in a situation of these many factors. And I won't go into all the things that could happen externally. The war in Ukraine going God knows what direction, given the way it bounces around now. The actual possibility, if that's what it is, of an American attempt to impose the Monroe Doctrine on Venezuela in our time, and the Middle East, which is perpetually on the edge of a catastrophe or not. There are so many converging economic problems or economically relevant problems that I think, yeah, everybody's on edge, and that's not going to stop anytime soon.
Yeah. Great points, Professor Wolff. I wanted to raise, in relation to this AI bubble, some of the ways that we are seeing a major divergence between the United States and China, and how interconnected this all is. So here we have the Trump administration pondering allowing NVIDIA to trade its most advanced AI chips with China. And the important thing here is that these advanced chips are now subject to major export controls of semiconductors that have been actually present for quite some time and majorly enforced by the Trump administration. And in this, Professor Wolff, there's been a major backfire effect in the sense that China has rapidly developed its own AI chip system to the point where the Wall Street Journal is saying that uh, uh, robots and AI have already remade the Chinese economy. And despite Trump's push to claim global manufacturing, China's factories and ports are learning to make and export goods faster, cheaper, and with fewer workers. And the point here is that AI for China is far more about manufacturing and production than how the United States is actually going about this as more of a consumer product. Professor Wolff, I wanted to get your assessment of what this really all means, how the Trump administration has really placed so much focus on AI chips, on curtailing China's advancement with AI, and it doesn't seem like it's working despite all of the clamor about how great things are amid recession fears.
Well, again, let me use some history to put this in a context. And I'm going to be blunt because these issues can get lost in the weeds. Ever since Mao Zedong marched in to Beijing and announced the success of the communist revolution in China, I mean now 1949, that's many years ago, the United States, even before that, but ever since that moment, has tried one way or another to undercut, slow down, reverse, stop. You can use a variety of those words to describe the policy of the United States. What they wanted above all else was to prevent what was then called the People's Republic of China from becoming another Soviet Union, which remember at that time was the great other of the United States. We were entering the post World War II Cold War of the second half of the 20th century. And all one can say today, from the vantage point of 2025, and what must be kept in mind, is every single thing the United States tried to do along the lines of stopping, reversing, controlling, limiting has failed. It begins by not recognizing China. For decades, the United States acted as though there were no People's Republic of China, didn't exchange ambassadors, had no interaction, circled that country with military bases, and on and on and on. That failed. Then in the 1970s, as we all remember, or those of us that were around do, President Nixon, with his advisor Henry Kissinger, went to China to quote unquote open it up. In other words, admitting that the policies of not recognizing had failed. And it's important to understand what failed meant. It wasn't just that the Communist Party of China retained power. It wasn't just that they recovered from World War II, amazing achievements in and of themselves. No, it wasn't that. It was the fact that Japan and Western Europe had discovered that the emerging China was a very profitable place to do business, even though it was limited in how much they could do at that time. And the American capitalist community let the president and let Mr. Kissinger know we, the Americans, do not want to be left out of participating in the remarkable, already then, economic recovery and growth of the People's Republic of China. And they achieved that. The United States entered in alongside the Germans, the French, the Japanese, and so on. Well, then the next phase makes the whole story more nuanced. Over the last 40, 50 years, that's what we're talking about here, American companies in huge numbers, invested hundreds of billions of dollars inside China. They set up factories, they set up warehouses, they'd entered into complicated partnerships with Chinese owned and operated enterprises, both private and public in China, since it's a hybrid, half public, half private system. And so, what developed, that's the way this works, is an enormous part of the American capitalist class that wants China to continue because they're making a fortune of money there. They can pay wages, even to this day, markedly lower than what they would have to pay in the United States. They have an immense manufacturing sector now in China to buy inputs from, often at prices lower than what they would have to pay if they were in the United States. They have a skilled, educated, disciplined labor force. They have a lot of attractive things they do not want to give up. So when the American government goes in there trying to stop, to reverse, to control China, these are American capitalists who call up Washington and say, "What's your rush? Don't be so eager. We don't want you to do what you're doing because it turns the Chinese against us. There's 1,000 ways they can pass laws, rules, regulations that inhibit our profitability, our growth." What people have to understand is there has been, for all many years now, and there is, as I speak now, a tremendous struggle inside the government between a political class, Trump, but the Democrats too, who are still in the Cold War era of anti China. Remember Mr. Obama, we're pivoting to China. China's the great enemy. But this is a completely different situation. The American capitalist class never invested in mass ways in the Soviet Union. We never had that problem. It's a mistake to see this as a continuation of that. It's radically different. We have inside the United States a dependence for our economic well being on the profitable relationships built up with China. And what you showed us now is that it's true for NVIDIA as well. They are in the chip making business. And China is one of the greatest places to sell that material, not just today and tomorrow, but indefinitely into the future. They are much more roboticized than the American capitalist system. That's been true for years. They are on the edge of technology the way we are, or better, on many fields. And that reality plays its role in the policy. Americans should not be surprised, although they will be, if you see a sudden reversal in Washington when a new group of politicians comes in. And who are they hooked up to? They're hooked up to those American companies that want a live and let live relationship with China. They don't want a war. They don't want hostility. They want Mr. Xi Jinping and whoever the president is to have a happy golfing trips together. I don't know if Xi Jinping plays golf or not, but you understand the point here. That has to be understood. Don't get lost in each. Nobody should get lost in each particular movement. This is across the board in many, many areas. And it's going to be fought out in the way I've described, not in the theatrics of China bashing. That may be fun for Lindsey Graham, but those people are marginal to what I'm talking about. They are as marginal as the left wing in America is marginal. The left wing is at least trying to do it in a realistic way to overcome that. But these people that you're watching with their anti-China, they are a residue of a past that is fading out of existence. And that's why they will get up in Congress and tell you why we shouldn't relax those export controls on the high quality chips. They're going to lose that battle. They've been losing them one after the other anyway. They're going to lose this one too because the leader of the video will go to Washington, as he has done countless times, sit down with the State Department or the president or the vice president and teach them once again, don't do this, because if you do, you will be shooting the United States economy in the foot. And that's dumb. Don't do it. And, after a while, if enough phone calls come to Washington from enough CEOs, you'll get the adjustment.
Yeah, well, the Trump administration has certainly been hard-headed on these basic these facts that you just laid out, Professor Wolff. And I want to show back from that Wall Street Journal article here just a key statistic here of the 131 factories and industrial sites recognized by the World Economic Forum globally for lifting productivity through cutting-edge technologies such as AI. 45 are in China, while just 3 are in the United States. And I want to then turn to this. This is while the United States is talking about an AI bubble, recession, such a thing is not actually being forecasted for China. The opposite, actually. Even Goldman Sachs is seeing that China's annual growth is likely to be 5 to 6%, even higher than many predictions across the financial sector. Professor, well, I mean, this to me amounts to China, in effect, almost popping the U.S.'s own bubble, in the sense that as the U.S. capitalist economy gets closer and closer to another breaking point, China just moves further and further ahead in this area, and it just makes these contradictions and this fury to contain China's development that much greater, which seems to compound the problem. Your thoughts?
Absolutely. And you're shaking your head, Danny, and you're right. Many of us have been shaking our heads for decades now. I mean, this has been the story. The GDP growth, if you look back over the last 25 or 30 years, I've done the work myself, you'll see that on average, the growth of the GDP of the United States over the last 25 years is in the neighborhood of 2.5% per year. And in China, it's in the neighborhood of 5 to 6 to 8% per year, 2 to 3 times faster, year in and year out. I mean, this is spectacular. We've never seen such a race, nor a race in which it's so lopsided. Of course, China will catch up if you have that kind of a difference. I mean, it's easy to show in arithmetic. The two lines converge because one is growing faster than the other. And by the way, I can tell you, in the year 2020, the two lines crossed. The year 2020 was roughly GDP of the growth rate of GDP in the United States with its allies, the G7, was roughly that of the growth rate of China and its allies. The total GDP, if you want a sense of how big the economy is, the economy of the G7, the US and its major allies, Canada, Japan, Britain, France, Germany, and Italy, their GDP was about 28% of the global output of goods and services. China and the BRICS, 35% today. They were the same in the year 2020. In other words, the gap has kept on growing since they crossed in 2020. That's why the world is a different place today. You can't think the way you did before. The United States is not the top dog economically the way it was from the end of World War II to around 2010, 2015. I understand it takes a while to adjust to a changing reality. And it's particularly hard for Americans because we are the declining major economic power. China and the BRICS are the ascending, rising economic power. They are now ahead of us. And that gives them, as you rightly say, an enormous foundation upon which to then make use of their relative strength. They give the government roughly half of the economy. Roughly half the businesses are owned and operated by the government. Half the businesses are owned and operated by private capitalists, both Chinese and non Chinese. And sitting on top of it is the state, the Chinese government, and on top of that, the Chinese Communist Party. So you have a coordination between public and private that allows them to identify priority targets and to use the private sector when that's the best way to get to those targets, and to use the public sector when that's the best way, and to be quite practical, quite ideologically neutral how to go. Whereas in the West, we have a state religion. It must be private. Okay, well, what gets short shrifted? The government. Yeah, but the government educates the people. The government worries about the infrastructure. You put the government in a subordinate position, you're going to get lousy results. That's what we're talking about. That's what we have here. And we're this America faced constantly with our brows knit as we seem to have difficulty understanding that the Chinese are doing what they have been doing for decades, and for one simple reason: it's yielded them the most spectacular economic growth in world history. No country has come as far from the poverty they suffered, say, back in the 1940s and 50s, to where they are today in that short a historic period. It took Europe centuries to make the comparable economic development. And sure, the Chinese use what went before, just like Europeans used what went before. But the bottom line that you have to face today is that the Chinese have a proven record. They know how to do it. They set their sights on being the number one producer of electric vehicles in the world, and today they are. They set their sights on being the number one producers in the world of solar panels to convert the sun energy into what we can use for electricity. And they have that. Now they've focused, as you mentioned, on the chips, so that they're not dependent in their roboticized economy on the West. And they achieved that again in record time. I mean, how many of these do we have to have before we have an American political and intellectual awakening to the fact that we've got a very serious problem here? It's not going away. We are not able to stop it. And short of nuclear war, in which we all, it's over, short of that, which I assume we're sane enough to stay, short of that, we're going to have to come to terms with them. All this noise, rattling the saber in Taiwan, it's all nonsense. It doesn't deal with what has to happen. And by the way, when people ask me what has to happen, this is not complicated. The United States has to sit down with the People's Republic of China around a table with their advisors and work out a way to live together on this planet. Everybody with half a brain by now senses will end up with that stuff. And stop the childish leftover of a Cold War that was in a different universe. That's not the model. China's not going to implode the way Russia did. There's a completely different situation. Russia never had a massive private sector. You could never say of the Soviet Union, half public, half private. It was all public. They took it all over. And I understand why. And the Russians achieved remarkable growth under the Soviets. Not that. But it was a different way of dealing. And the Chinese have proved that they have figured it out. Sooner or later, somebody would. The world was never going to stop by having either everything private, Britain and America, or everything public, Soviet Union. along would come, how big a breakthrough is it to say, well, maybe we should try a hybrid. Maybe we should try something that mixes them under the control of a central authority that can identify priority. Wow. Wow. Why does China have a network of rapid trains that Europe doesn't have, that the Americans can't even imagine? I mean, I could give you example after example, but we shouldn't need this many examples.
Yeah. Yeah, and people don't like when I say this in the West, but or in the United States too. It's if maybe the United States needs to take a cue from China, because people have been asking in the chat, uh, what is China doing about displaced workers? Well, China is addressing poverty, so try to alleviate poverty. So to be able to both have a private sector and a state economic sector that is prioritizing areas of development in a planned way, to be able to then take care of or address, however imperfect, it's not perfect, but it works to address people's concerns, to lift people's standard of living. That in effect would be a model in its own way, in the US's own terms, that could preserve the very system that me and you don't really like, but it would preserve it. It would preserve that system. But they're not doing that. Actually, Professor Wolff, the Trump administration is doubling down on denial. You've probably have seen this in terms of Scott Bessent, the Secretary of Treasury. Well, here's Scott Bessent doubling down on this kind of economics of a dying empire, just essentially ignoring what's happening in the real world and doubling down on talking points. And I just want to play this first and then show some of the reality of the situation, which contradicts Scott Bessent.
And yet some prices are going up. Of course, we have seen prices increasing on staples like coffee, bananas, bacon. Inflation has gone up. It's at 3% now, up from 2% in April when the tariffs were imposed.
No. They weren't. So inflation hasn't gone up. And Kristen, the one thing that we're not going to do is do what the Biden administration did and tell the American people they don't know how they feel. They are traumatized, and over the Biden inflation, we have slowed inflation, and we are working very hard to bring it down. Kristen, I can tell you that the Council on Economic Advisors has a study. You know the best way to bring your inflation rate down? Move from a blue state to a red state. Blue state inflation is 0.5% higher, and that is because they don't deregulate. They keep prices up. Energy is higher.
Just according to the consumer.
So I'm going to get to this because it gets cut off. So the proof is in the pudding, though, Professor Wolff. It is not going well, as Scott Bessent seems to think. There's no new data showing that consumer confidence is down by about 7 points from the previous month, and that it's about cost of living strains. The data shows that wholesale prices, which you can explain better than me, but have to do a lot with tariffs, rose more than the expected 2.7% in the 12 months prior to September. So, Professor Wolff, as this is all happening too, I'll just show one more graphic here. We have a grimmer trend that we've talked about on this program, but I wanted to show the chart. People may have a hard time seeing it, but essentially what you see here is holdings of U.S. Treasuries. And let's just go to China, the mainland. Since January 2025, it has gone down from 760.8 billion to 700 billion as of September. So major drops. And the same goes for actually India too, and Hong Kong, which is part of China, but has a separate financial system. Professor Wolff, your reaction to all of this? This is major denial, and it has implications both for how people are actually living in the U.S. and this overall dollar system that represents the economic order which undergirds all of this.
Well, let me begin by saying, and I won't dwell on it because it's not worth it, but listening and watching Mr. Bessent as a professional economist, which he is and I am, all I can tell you is I'm embarrassed. That performance you just saw is beneath what our professional training ought to make possible. I understand it will please his boss, and I guess that's why he's there to do. But as an economist, that is shameful. Comparing blue and red states in terms of the rates of inflation in each of them is itself a very complicated calculation to make, doesn't lend itself to anything like the use he's making of it. I'll give you an example. How do you count when someone in a red state buys something from a seller in a blue state? Is that the price paid by the one, or is it the price charged by the other? How does that work? How do you account for things that are priced in one state but purchased in another? You can't do what he does. The movement of goods and services between states makes all of that very weird as a calculation objective, and it's very hard to do if you're even going to try to do it. And then to talk over the young woman there who's asking questions and giving make-believe numbers to the inflation. The importance of inflation, by the way, it's always a relative term. It's not, do the prices go up or down? It's a question of, how do the prices go relative to the incomes of the people who pay the prices? Or if you like, how does the price movement in this country compare to another country? That's very different from one state to another. And let me give you some examples that he carefully leaves out. We now see prices rising faster than wages. We also see prices rising while jobs are being lost. That means people's incomes are being hurt one way or the other relative to prices, which never came down from the booms around the pandemic when prices were shot up, never came down, even though Mr. Trump promised he would. They keep going up. It's not at all clear, if you break it down, how you compare the price increases of the things everybody depends on, basic food, clothing, shelter, versus other things. And that would be important to know for the mass of the people who can't buy most luxury goods. Here's a statistic that ought to dwarf all this kind of conversation. It is now the case that 1/2 of all consumer goods are purchased by the richest 10% of the American people. The other 90% of us share the other half. Now, we've not had a situation like that. No wonder people are freaked out by what they can and cannot afford. They're aware of what the people in the 10% are buying, which is what they can't afford. Let me give you another number that puts this inflation in perspective. You know what the inflation of the CPI, the Consumer Price Index in China, is this year? Get ready, 0. There are even some measurements that make them have a slight decline, a deflation instead of an inflation. So the income earned by a Chinese worker is going further this year than last because the prices are going down. And you know why that's important on top of everything else? It means that the Chinese goods, when they're offered in the market in the world, are priced at what it costs in China, and they're coming down. American prices are going up. You know what that means? Everyone in the world, including Americans, is being pulled to buy the cheaper Chinese relative to the more expensive American. Those are the real meanings of inflation that ought to be how Mr. Bessent or anyone in his shoes answers. Of course, the people of America are concerned about inflation because, as I've just shown you, the impact of that inflation, when you think about it in context, is a very big threat to the American people. And let's remember what Mr. Besson said, but clearly didn't understand his own words. We want to be where, or we want to respect what people actually think. Well, they actually think they're getting screwed by the inflation, which is true, and not the nonsense you spilled out after you claimed to respect their attitude. You gave them all kinds of reasons to believe they shouldn't have it. You've been working hard, you say. You've been doing this. We did. Stop. That's not respectful for people's upset. That's trying to give them a reason to think they're in the wrong for being upset, but they're not. They have their finger exactly on a very vulnerable part of a declining situation they have to live through.
Yeah, and Professor Wolff, if you could talk about how you can go into the details of how this declining U.S. empire, how does it relate to the economy, and also specifically, how do these conditions relate to the phenomena, which I can pull back up, of the U.S. dollar, for example, or U.S. debt holdings being far more risky internationally, and we see China, which I believe is the third largest holder in U.S. securities, shedding them quite rapidly, actually, in the last year alone. Talk about this. What is the relationship between these two things? Because I think often they're talked about separately, but a declining empire that we see all of these just absolutely horrid conditions getting worse, I can't imagine that doesn't have anything to do with what's happening with the dollar standing everywhere.
Yeah, let me explain it this way. For many, many years after World War II, the United States was not just the biggest economy, not just the producer of the bulk of goods. It was also the dollar became the global currency. Everybody traded in the dollar. Everybody accumulated dollars because they needed dollars to do business. Why? Because the United States was a major place to sell, and the United States was a major place to buy. It went even further. In recovering from World War II, the United States did something called the Marshall Plan. It lent the money to Europe with which the Europeans would buy the American products to recover from the horror and the damage of the war. So the United States was the source of loans, the source of imports into the rest of the world, the source where they could sell their exports and make the money to build their economy. We were the center of everything. And what that meant was, if you were a corporation anywhere in the world, you wanted to be invested here in the United States because you could see that being in the United States was being in the place where everything was exploding. The economic growth of the United States as it funded the world's recovery from war, as it provided the tractors and the steam shovels and the brain power, everything that the rest of the world needed to recover. If you understood that, you brought your money here to invest, to get a part of the profits from being in on the great American growth story. Here's a second thing that you did. If you were wealthy, if you were the head of one of those companies and you were accumulating a lot of wealth in your family, you were aware that if you lived in Asia or Africa or Latin America or Europe, there were lots of conflicts and struggles, and your money was not so safe. If a revolution happened in your country, and let's remember, at the end of World War II, a whole host of revolutions happened all over the world. China wasn't the only one. India broke away from the British Empire. Half of Europe, the eastern half, became countries associated with the Soviet Union. You understood your wealth was risky. So where would you hold your wealth? Answer: you would put a deposit in a big bank in New York City. They accepted accounts from foreigners. They wanted their money where they would be sure there'd be no revolution. The United States, after World War II, was in a Cold War with Russia and would never allow communists, never allow socialists. Look at the upset here in the United States when a few weeks ago a socialist won the mayoral race in New York City. And I'm talking to you from New York City. It was a bombshell here that a socialist could be in such a position. It was outlawed. So wealthy people came here. And why did that help us? Think about it. A millionaire in, I'll pick a country, Malaysia, deposits $10 million in the Citibank in New York. Well, that's money in New York. That's money the Citibank can now lend out to Americans. It can offer low interest rate to an American to borrow the money because they're really only holding it for safekeeping for the Malaysian. They don't have to pay him much. Why? Because he's getting safety, and that's worth it to him. He'll live with 1% or 2%, fine. He wants his money safe. I'll give you another example. It's famous realtors walk folks along Fifth Avenue, which is a very elegant street here in New York City, literally a couple of blocks from where I'm sitting. And real estate agents take you there at night, and you notice very quickly that most of the buildings are dark. Most of the windows of a tall skyscraper, 20, 30, 40 stories high, are dark. Why? Because they're not lived in. It's a regular apartment, it's fully furnished. It's owned by a rich person somewhere else who wants to have property in New York because it's safe. Yeah, he'll put deposits in a bank, but he'll also buy an apartment. 2 or 3 times a year, his family will visit New York as tourists and do some interesting shopping and live in the apartment. The rest of the time, it's dark. It's there because wealth comes to New York. And his relatives will visit New York every year and spend a lot of money buying things on Fifth Avenue to take back home with them. All of those things add up. The people buying those apartments drive up the value of real estate in New York, and that is used as collateral to borrow big sums from the bank to build more high rises that give all kinds of construction people a job building that. The American economy benefits from the empire it presided over in countless ways. All of that is now dying away. Apartments are being sold by those rich people. You know why? Because the United States isn't safe the way it was. What makes them think so? Let me give you a few examples. It's the president of the country that celebrates lawfulness, making the law of the land count for something. This is a country that has, in the last 4 months, killed 85 people sitting in little boats in the Caribbean and the Pacific in the neighborhood of Venezuela. These are people the president says are drug traffickers operating in narco boats. These are all presidential terms. Did they get a chance to confront their accuser? No. Do we have any evidence presented to any jury or judge about these people's behavior? No. Was there a jury? No. Was there a judge? No. The president of the United States executed, killed these 85 people. That's not lawful. For those of you who may not know, drug trafficking is a crime in the United States, and people are arrested for that crime in the United States. Literally, as I'm speaking to you, and that's been true for 50 years, if not longer. When that happens, they are arrested. If they have drugs, those are confiscated. They are then given a lawyer. They have an opportunity to defend themselves before a jury. The jury votes whether they're guilty or innocent. If they are guilty, they will be given time in prison. But we do not execute such people. Drug trafficking is not a capital crime. It is not punishable in the United States by death. Mr. Trump is killing people, no jury, no judge, no lawful behavior. The rest of the world looks at this correctly as a sign of serious trouble. The same president is sending troops into the major cities. This is a sign of a society falling apart. Last week, Mr. Trump called for the death penalty for Democrats who told soldiers, reminding them you're not required to follow an unlawful order. I could go on, but these are signs to the rest of the world. Uh-oh, you better think again. How safe are you? A president who does those things, you think he will hesitate to seize your property? For those of you who don't know, at the beginning of the war in Ukraine, the United States and Europe seized $200 to $300 billion worth of Russian assets that were held in banks in Belgium and other parts of Europe. Okay, there it is. If you're a wealthy person, you're we live in a world where you now have to think. So they're pulling their money out of the United States. They're spreading it around. Not so easy to find a safe place elsewhere. But the United States isn't what it was, and it's costing us. Lots of little places here, there. You wouldn't notice this apartment was sold, that deposit was reduced. You know, but when you look at the whole picture, there you begin to see again the difficulties that our declining empire, and the reason why you want to sit down and work this out with the Chinese. Not imagine that you're in the driver's seat and can punish them and whack them and it doesn't come back to hurt you. We're not in that anymore. And the sooner we understand it, the better off we'll be.
Hell, Professor Wolff, I don't know if you peaked at the, I don't know how many points it is anymore, 28, 19, whatever, so-called peace plan. In it, that question of Russian assets is right there. And the Trump administration, the United States basically said, oh, we'll take at least 50% of those, or we'll take them, we'll control them, and 50% of them will be used in some kind of reconstruction arena, essentially saying the U.S. is still going to control them, to a party that they're expecting to sign off on the plan, Russia, to the party that was stolen from. It's absolutely mind-boggling. And also, Professor Wolff, maybe you can comment on this, the tariffs. Now, all of the numbers that I showed earlier, not just the dollar holdings or debt holdings, security holdings declining, but especially the issues with employment, these recession markers, and the inflation. There's a big correlation. Now we have enough time since April where there's a huge correlation between these things. And even in the Financial Times, in that article I pulled up, said that the goods that are distributed, the costs of that is way higher now than it has been. Wholesale prices, they say. So could you talk about this? That seems to be why tariffs then, if now we know that they're not doing anything good, even for the Trump administration. Why would the empire still double down on this thing that seems to be only causing more and more problems, even for capital itself? They're complaining about it.
Sure. The word to keep in mind here is desperate. What you watch when you watch Mr. Trump, try to see through the theatrics. Like many presidents, Republican and Democratic alike, they spent an awful lot of time bloviating, talking, trying to get you to see whatever it is they're doing as a carefully thought through plan that's going to work real well. And wow, are you supposed to be impressed? That's almost never the truth. But nowadays, given everything we've been talking about for the last hour, you have a president who's desperate. The tariffs are an act of desperation. You don't otherwise, you couldn't possibly explain a president who gets up and hits the entire world with a tariff. Huge tariffs out of the blue. No conversation with these people. No plan. No, let's sit down. Let's take a, nope, not at all. He has a chart he shows us back in April. You see this chart? I'm hitting everybody with a tariff. Nobody else does that. Nobody else this year did that. Nobody does that. Why would we do it? Well, here are the two reasons, among several, that are driving Mr. Trump. The national debt is out of control. We owe as a nation $38 trillion as I speak to you. That's a bigger debt than any other country on earth has. And it's been going up real quickly over the last 25 years with no end in sight. It is so bad, the debt, that we're having the lenders, which include corporations and rich people, they're the ones that have the money to lend to the government, and other countries, like you showed us on your table there, Japan, China, Britain, and so on. They're all telling the United States, we will not keep lending to you because you're borrowing too much. And why won't they lend? Because when you keep borrowing more and more relative to the size of your economy, it becomes dangerous for people to lend to you. You won't be able to pay. Is that true of the United States? Yes. Let me show you. Interest on our debt. What the government has to raise in taxes from you and me, not to pay for defense, not to pay for the roads or the highways or the Social Security for older people, just to pay back the lenders, Japan, China, and corporations and the rich, is now about equal to the total amount we spend on defense in this country, roughly $1 trillion. And you know, the lenders are saying to us, we've been here before with many other countries. We know that at a certain point, there's a risk that the people of your country, in this case, America, will rise up and say, we are not going to tolerate your cutting back on food stamps for the poorest among us, so that you can use the money instead to give to the rich corporations and wealthy people who have lent money to the United States. We won't allow it. At which point the politicians will call up the corporations and the rich and say to them, we're terribly sorry, but we're not going to pay you. Argentina did that last year. It happens all the time in the world. That's why the credit rating of the United States as a country, which used to be AAA, the highest you can get, is now ranked AA. Are there countries that have AAA? Yes. Is the United States one of them? No. We're coming to the end of the hustle in which we didn't tax corporations and the rich and instead borrowed that money from them. Very nice for the rich. Don't have a tax. I'd rather lend it and get it back and you pay me interest while I wait. That's our system. Crazy for the working class to ever have allowed this, but we did. And now the chickens are coming home to roost. And Mr. Trump has to do something. So he's imposing a tax on us. That's what the tariff is. The tariff is a tax attached to any company American or any individual American who brings a good or service into the United States that was produced outside. And what did Mr. Trump know? That the American company or the American individual that brings in the Japanese electronics or the French wine or the Brazilian coffee or whatever it is will immediately raise the price to the consumer to recover the tax, the tariff he has to pay to Uncle Sam. So when Americans say, I'm upset about the inflation, what they mean, because no one has explained it to them, is they don't like being the ones stuck with the cost of the tariff once it's passed on to them by the people who pay it, the American companies and individuals. So Mr. Trump thought he could fool them. They wouldn't see themselves being taxed. They think the tariff was inflicted on the foreigner, that Trump talks like that, but what they didn't understand until it hits them in the supermarket aisle is that the prices keep going up because that's where the tariffs end up being paid for. It's very sad for those of us who learn how the system works to watch it rip the American working class off, but that's what's going on.
Yeah, and as we close here, Professor, I just want to say to those who watch this program, this is not about partisan politics. I've had Professor Wolff on here for 3 years now, and I'm very grateful that you've graced this show for that amount of time. And that was during the Biden era too. And we did talk about tariffs. Now, they weren't as extensive, they weren't as fully expansive and universal as they are now, but we talked about tariffs on Chinese electric vehicles, for example, that were imposed under Biden as being a disaster. Maybe you could close on how, when we talk about the empire declining and we focus on the Trump administration's policies, to me, it's because politics do matter in the sense of where the focus is, how it's done, how it looks like. But ultimately, we have been on this trajectory for quite some time. And the Trump administration's second go round here has accelerated it. I think the proof is there, regardless of how one wants to spin why that's happening. But the proof is there. So, Professor Wolff, your final comments on this?
Yeah, I'm going to end by telling you a story. A few months ago, I visited Paris, France. My father was born in France. I speak French, so I don't have to be a regular tourist. I can get along. And I needed to go from one part of Paris to another, and I took a taxi. I found a taxi. I got into the taxi, and I started chatting with the taxi driver. I like doing that. Gives me a feeling for the country I wouldn't get any other way. And I noticed on the dashboard the letters BYD built in. And I know what that means. That's the name of a Chinese electric car company. It is actually the most successful of the Chinese electric car companies. It stands, by the way, for the English words, build your dream. So it's the BYD Corporation. And I said to him, oh, you have a BYD? Yes, I have a BYD. And I said, well, I'm really interested. Why did you buy this one if you bought it? He said, no, my boss bought it. He bought a whole fleet of them. We all drive the BYD. And I said, well, why do you think he bought them? He said, oh, we all know why he bought them, because they last longer and they're much easier, quicker, and cheaper to repair and to maintain. And in the taxi business, where all you do is drive the thing all day long, and sometimes we have shifts. I get out, he explained, and another driver takes it for the nighttime shift or whatever it is. This is by far the best deal. And then I asked him the obvious question. Is that why taxis are cheaper in Paris than they are in New York? Yes, he said, because it's a cheaper vehicle It lasts longer. It's better. It's easier to fix. So you asked me earlier, Danny, what are the effects? Well, here's a little example. We don't have BYD in the United States. I never see one. I don't see it on the road. No taxis in New York are BYD, et cetera, et cetera. So we pay more. We don't get a better service. The profitability of the taxis in Paris is at least as good as it is here. We lose out. We all lose out. We have no idea when we step into the cab in New York City, as millions of people do every day, that they are suffering, disadvantaged from other parts of the world because we can't get for $30,000 the car that the Parisian taxi company is able to get and put into service. Well, you multiply that by all the other goods and services that the Chinese produce. And let me remind everyone, they are now the biggest manufacturing center in the world. Nobody comes close. So they're in the position to do this, and they're doing it, and we're paying the price. And if it's slow, it doesn't mean anything less than we're paying the price. And whether it shows up in the supermarket or it shows up in a taxi ride, that's the reality. And that's why the policies being followed by the United States government, Democrat and Republican alike, is a disaster, a mistake, and something we should wake up and turn away from as soon as we possibly can.
Yeah, I think this is a great place to end on, Professor Wolff. Thanks for your time on this day before Thanksgiving. Where can people find you? I'm about to put all of this in the video description, starting maybe with what you would like people most to see and check out.
There are two places to go. The first one is our website. That's democracyatwork.info, INFO. And the second one is our Substack, which is a major priority for us. It's democracyatwork.substack.com. Those are the places you can go to see our work, all of it. We publish books, we produce videos, we run classes. We're doing, we're exploding as the interest in what we have to say grows. And I'm very comfortable telling you it's growing faster than we can keep up with.
Yes, well, all of that is now in the video description. As you leave here, everyone, be sure to hit the like button because that helps keep the stream going so more people and more eyes and ears can view this. And furthermore, all the places to find both Professor Wolff's and my work and how to support it are in the video description from Patreon, Substack, and much more. With that said, everybody, take care. We're going to head out together and see you again very soon. Bye-bye.